Before I begin the video, I just want to flag, as always, that I am not a qualified financial advisor and nothing I say should be considered as financial advice. Hello, I'm the Jolly Saver, and it's been 5 years now since I started my investment journey. So in this video, I'm going to give a bit of background about why I started investing and then talk you through the past 5 years and some reflections. So just a bit of background. So in 2019, I went on holiday to the US and I was in New York, and I went to a bookshop and there was lots of personal finance books, and I bought Your Money or Your Life by Vicky Robin and Joe Dominguez, and I read it on the flight back. In that book, I really learned about, managing money and what the options were in terms of saving and investing. And although I'd heard about investing a bit before then, I really started thinking about it, did my own research, and I decided to open a stocks and shares ISA here in the UK. So that was April 2019 when I first opened the account. And yeah, I'll jump right in and show you the figures. So the first thing to flag with investing, and I've got a disclaimer at the start of the video, is that your capital is at risk when you invest. So that was something that I really had to bear in mind when thinking about how much I was willing to invest each month. So what my mindset was back in 2019 was, I'll invest the amount of money that I'd be willing to lose. So if I lost the money, I'm not putting great sums in there where I'd be having sleepless nights. I decided on a figure of £100 because to me, that is a couple of takeaways per month. So I'm thinking, I can sacrifice the takeaways for trying out investing. So I pretty much went off to a really good start in terms of I was contributing £100 each month. Because of the balance that I was building up, it was very small balance to begin with each month. The market gain or loss, so this is the amount of money that my investments gain or lost each month. They were very small figures. So you think actually the percentage seems quite high, 7%, but actually that's only £7 in the month. And then I've got this cumulative return column here, which looks at the total amount that I've gained or lost on my investments. So it was pretty much going smoothly. And then, as you would expect, we got to February and March 2020, and my investments took a bit of a nosedive. I mean, this was a really good test of being comfortable with risk and uncertainty and investments going down in value. So because I'd only invested what I was willing to lose and it was spare money that I had, I wasn't too disheartened or disappointed that my investments had seen a loss. And really, at the end of that first financial year, I was ending with a cumulative return of negative £96. So I'd actually lost money compared to what I'd contributed. So I think this was a lesson in terms of, if I'd put all my savings into my investments and say I needed them for something, and if I had sold my some of my investments in that month, then I would have realised the loss on my money. So I think the lesson for me here was, don't invest more than you can afford to lose, or invest the amount of money personally that I can wait for the market to pick up. So this money that was in there, I could have waited a year, 2 years for the market to pick back up. So that was year one. Year two, I had this direct debit set up where £100 was coming out my bank account each month, and automatically purchasing my investments within my stocks and shares ISA. And you can see that this market gain loss column, the fluctuations are what I was expecting. You've got a lot of positives, but also balancing that out, we've got some negatives. And the range that I was seeing was, some months my balance was going up by 6% because of the market, and some months it was going down by 2% because of the market. And actually, in terms of cumulative returns, once we passed May, it was all going in the one direction. It was always going up. And I was sitting on a pretty good balance from my perspective at the end of March 2021. So I had an investment balance of £2,500. I think the way I view these investments, and definitely did in 2020 and 2021, was that these are long-term investments. So the idea that I have is putting this money away for 20 to 30 years and just letting it grow, trying to contribute as much as I can, and just letting it sit there and grow. And then when I want to retire, or maybe when I want to sort of supplement my day job income, then I can dip into this in this pot. So year 2 going well. Year 3, so actually this was going well again. I think for me, I guess what I noticed in year 3, that I was getting more and more comfortable with purchasing £100 of investments per month. And in October 21, I made the decision that I would up the amount that I was investing. And it's really important that I talk about this here, because you'll see as I go on, there's a question about that, whether that was the right decision for me. So I got very enthusiastic, and in November 21, I purchased £600 of investments. And then, I did 200, and then another 200, and then the biggest month in Feb 2022 was I purchased £1,200 worth of investments. In terms of the market gain or loss, again, there was some fluctuations, but actually in this financial year, I had seen a lot of green, and I was seeing a lot of growth, and my portfolio balance had shot up from just over £2,500 to £5,500, which was huge. And I think I probably fell into a complacent sense with this, and I was sort of in my mind, because it was a lot of being in the green. I think I'd maybe started thinking about this investment as a bank savings account rather than being investments. And I think that's probably why, as you'll see in the next financial year, things started to go a bit sour. You can see here, so started off with April, contributed £200, again, continued with that. But what I started having here, and this is only natural with long-term investing, was that the market started fluctuating, but in the negative direction. So I had a few months of losses. Now, I will say, I talk about a market gain or a loss. That affects the balance in my portfolio, but unless the only time I realize that gain or loss is when I sell my investment. So my view with long-term investing is, if I'm keeping it in there, even if the market is on a downward trend, as long as I don't sell, then I haven't realized that loss, if that makes sense. But you can see that actually, as soon as I started seeing a loss, you can see that my habit changed. So I was like, £200 a month, no, I need to just revert back to the £100. So there was probably a lesson there that my risk tolerance wasn't as strong as I thought it was, because my behaviour changed as soon as things didn't look as bright. So then I started getting onto my footing with £100. But then November 22, I withdrew £1,900. And this is probably the biggest lesson I've had in my investment journey. And that is the probably rule I've set myself now going forward, is I will only put away what I'm willing to not have access to for a number of years. So actually what I'd done was, in that previous year where I'd contributed £1,200 in 1 month, some of that came from an emergency fund, and I was left with a very light emergency fund of less than £1,000. So it meant that when things cropped up in life, as always happens, me and my partner own our flat with a mortgage, and it is natural that things crop up where things need to be repaired, or might have a leak, or there's all these costs that are part and parcel of wear and tear of a property that I hadn't accounted for. When things were going good and my sort of costs in a month were very low in terms of living expenses, I thought, I can get by with less than £1,000 in my emergency fund. But actually, something cropped up where I did need to dip in, and it had a bit of a two-way sort of impact on me. The first was that naturally my balance went down, so that was one thing, and I hadn't took out the money when the market was fantastic, so I sort of at that point hadn't really gained any money, so my cumulative returns were minus £13, so it was a bit like, it felt a bit pointless for me taking it out, because I'm like, you haven't even gained any money on this money. So that was that thing. And then the other thing was, because my balance went down, my motivation with investing sort of went a bit out the window, like, because I felt a bit disheartened and disappointed in myself. It affected my journey for the next few months. So for the remainder of the financial year, I still managed to contribute, £100 to £200 per month. You can see that this has probably been one of my worst years in terms of market fluctuation. So there was a lot of red in the year, and I think the disappointing thing, as I mentioned, is that I'd started the year with £5,500 and I'd ended the year with just under £5,000, and this wasn't just to do with fluctuations in the market. I'd actually taken money out, which was a lot harder to accept than the market being on a sort of downward trend. So then we went into 23-24, which is the financial year that has just ended, and I think that motivation really waned, and I really struggled with it in the first half of the year. I felt so disappointed that at one point I'd had £6,000 in my account, and now I'd only had £5,000. So it really took me up until about November time to pull myself together and think, actually, just because things aren't perfect doesn't mean you have to give up. I think sometimes, particularly when thinking of investing and when watching people online, you have this view that even though the market's not a linear trend, you have this view that you're always going to be contributing more and more, and you're always going to be learning and behaving better in the future than you are now. But I think what I've learned is that I'm human, everyone's human, and you sometimes do things that aren't necessarily rational or the best thing to do, but the decision that you make at a time that feels right, and even if it turns out to be the wrong decision, you still made it with the right intentions. So I sort of had to forgive myself a bit and just set myself a goal from November to contribute something each month, because for me the lesson was, as soon as I stop contributing money to the investments, the habit goes out the window, and the habit goes out the window, and then I stop it altogether. So my mission from November onwards was just to contribute each month. By this point, I had built up an emergency fund, so I felt more comfortable contributing £300 per month. And I haven't really talked about my income returns, but some of the investments that I invest in, they have dividends that they pay once every 4 months. So you can see here that I was making £12 every 4 months, which, it just helped add to that overall return that I was getting. And you can see that actually 23-24 was a fantastic year for me for market gains. So it's funny how in a year the cumulative returns can kind of change. So at the start of the year, I'd only sort of made £121 on all my investments, but then by the end of the year that jumped to £1,200. So the picture started looking a bit brighter, and actually I ended the year with an investment balance of £7,730. So my aim for the next financial year that we're just going into is to get to that £10,000 investment balance. That for me will feel like a real big milestone, because I'll be going from having a 4-figure balance to 5-figure balance, and I'm hoping that, even if I didn't contribute another penny, the fact I've got maybe £10,000 kind of squirreled away in my ISA, that'll hopefully pay off in the long run. I think probably my aim for the next year as well is just to contribute something each month. So whether that be £25, £10, as long as I still have that habit of saying I invest each month, and yeah, I'll be happy with that, and not drawing any money out of this. I think the only time I'd want to draw money out is if I was in a very worst case scenario. So say I had lost my job and I'd utilised all my emergency fund, and yeah, it was like the only option was dipping into this money. So the last thing I'll do is I'm going to put all this together I've got this last tab, and I thought it was really interesting to see all the market gains or losses each month over 5 years, what that actually looks like. So there was 35 months where my investments had grown in value, and 23 months where they had went down in value. So you can see here, I've just plotted this out month on month. You can see the ones above the line are the ones where there's been a positive increase in value, and then there's been a decrease in value at the below the line. And I think this is, so 60% of months I was positive and 40% it was negative. And I think this is really probably the key that I've learned, and I knew about already before I started, but it's the key thing about long-term investing, is that you have to be prepared to be comfortable with the fluctuations that exist in the stock market. So you have to be comfortable with, your balance going up as well as down. And if you're someone who will panic in those months, like this month here, I'm assuming that's probably one of the COVID months. Sorry, I shouldn't say one of the COVID months. One of the months at the start of the pandemic, that negative 9%, if you're someone who's going to panic and withdraw all your money because it starts going down, then maybe you have to think, is investing right for me? And I think doing this over a long period and starting out with small amounts, it's really helped me build that tolerance to these fluctuations, and really just know myself and know what my risk tolerance is. So I even know now that there's probably a level of money that I'm happy to contribute and not worry about. So that's probably, if £500 probably my max per month I'd be happy doing at the moment. But if I don't think I could see myself investing £1,200, £1,300 per month, because for me, I just don't think I may be as tolerant to seeing those big sums going up or down. And I think probably overall the the point is, this is what I've seen month on month, but the bigger picture 5 years down the line is I've contributed £6,500. The market gain is £1,200, so I'm finishing with a balance of £7,730. So I'm hoping that going forward that the market gain just increases and I contribute more. But yeah, I think for me, you might look at these figures and you might have clicked on this video and you might have thought, wow, I'm going to see someone who has got a £200,000 investment balance. That isn't me. That's not my journey at the moment. I know sometimes it's not as clickbaity or inspiring maybe to watch people who have very sort of small portfolios, you might say, but this is real life to me. This is realistic. This is my journey, and I think sometimes sharing it's helpful for people to understand what a realistic investment journey might look like. And also, I'm really glad that I've tracked these figures over the past few years, because it really allows me to reflect on the journey and understand what investing actually looks like. I think you can read about it, but until it's your own money and until you're going through it, you can't really understand what that process looks like. So I'll leave it there. I mean, every year I will be doing one of these videos, and hopefully year on year I'm going to be learning more things about myself as well about finance. And yeah, if you're on a similar journey, I'm really interested in hearing about what your mindset is with it, how you approach risk, and whether you've noticed kind of how your behavior changes depending on how the market's doing. So I'll leave it there, and I'll see you on the next video.